Hi, this is Dr. Meherji. Welcome to today's accounting introduction class. In a earlier one, we have seen the definition of accounting. In this class, I am going to tell about accounting, its history, economic events, users of accounting information, types of accounting, qualities, objectives, basic accounting terms. Welcome you all. Already we came to know that accounting is the language of business. It helps us to understand the financial transactions and their impact on the business firm. What is accounting? Accounting is identifying all the financial transactions happening in the firm. It measures all these transactions in terms of money. Then it records all these identified financial transactions which measured in terms of money, records in the books of accounts. Why it is recording in the books of accounts? The main goal is to communicate this information to the various interested parties, the inside or outsiders of the firm. It helps business track earnings, spendings, and ownership. Now we will see the history of accounting. It has a long backed and developed with the civilizations, Babylonian, Egyptian, and Indian civilization. For it has roots from that level onwards. During 4000 BC, Babylonians used clay tablets to record transactions. They started recording business transactions and they developed payments of wages and taxes and recording them in the clay tablets. And when it comes to Egyptians during 4th century BC, developed auditing system for checking storehouses. And during Indian civilization period, they developed Bahikata. That means double entry bookkeeping system. So it has its roots since civilization of well-known this Babylonian, Egyptian, and Indian civilizations. When it comes to the events, which one it will record? It will record only economic events. Whether that events are external or internal. External means we sell goods to the outsiders. Definitely we will sell goods to the outsiders only. We won't sell goods to the insiders. So there is a party outsider involved in it. So it is external event. And if we transferred goods or raw material from one place to another place, say for instance, raw material will definitely store in our stores, and that process will be, conversion activity would be happened at factory. We will send whatever that raw material requires from stores to factory. It is an internal event. So economical events are like this, external and internal. And the users of accounting information, the accounting information would be used by internal persons such as managers, how they are managing the affairs of the company, owners to know their profitability, how the firm is going on, and employees, how their firm in which they are working is going on, how much bonus they can expect, or how much salary hike they can expect. For that purpose, they will use this accounting information. When it comes to external users, investors are much interested in accounting information. Why? Whether their invested money is in safe hands or not, whether it is best utilizing or not, how much returns they can expect, how much share price or how much dividend in terms of dividend they can get at the end of the year. Like that, to know all the financial metrics, investors are interested. And the creditors are interested to know whether their lending money is in the safe hands, whether they are utilizing the purpose for which they took that money or not. To know that, they are interested in the accounting information. And government also interested in the accounting information to formulate taxing policies. And customers also interested how their favorite firm is doing, whether it is following any social responsibility or ethical business. To know all that information, they are interested in the accounting information. Tax authorities also interested in the accounting information, whether the firms are paying taxes based on their earnings or not. To cross-check tax returns with the various transactions happens inside the firm, they are much interested in the accounting information. All use this information for only one common goal, that is decision making. And when it comes to types of accounts, there are three types of accounting, not accounts, it is types of accounting. One is financial accounting, tracks data and creates reports. Track data, financial data, and creates reports. What reports it will prepare? P&L account, balance sheet, and cash flow statement. These three are the financial reports. And another accounting is there, that is cost accounting. It calculates the cost of product or service the firm which produces or provides service. Another one is management accounting. It is mainly for decision making and formulate planning. There are these three types of accounting are very prominent. Of course, types of accounts also three, that we will see it in the coming sessions. And when it comes to qualities and objectives, the accounting information should be reliable. That means it is accurate and unbiased. It is having relevance. Then only they can formulate decisions properly. Another quality is understandability. Easy to grasp what they are supplying that information. And accounting information that should be comparability. It should have comparability. Compare that data to another form. And objectives of accounting, the main objective is recording that financial transactions and thereby to calculate profit or loss suffered by that firm during that period, and show the financial position as on a particular date, how much assets it has or how much liabilities it owns, and provide useful information to the users of the accounting information. Now it is the time for knowing basic accounting terms. It is not the last but important one. First one is assets. What the business owns. Example, cash, land and buildings, plant and machinery, like that. Liabilities, what the business owes. And the capital, money invested by the owner, is called as capital. And expenses, cost to earn revenue. Okay, to generate that revenues, one should incur some costs, that would be called as expenses. Example I have given here is salary. And based on these revenues and expenses, we will suffer either profit or loss. If revenues are more than expenses, we will get profit, or expenses are greater than revenues, we will suffer loss. So thereby the final thought of this is, accounting is the language of business, essential for better decisions. Essential for better decisions. Thank you one and all for spending your valuable time with me. Please subscribe and follow my page for more and more upcoming videos on accounting. This covered topic is CBSE Accounting 11th class, chapter 1, complete chapter 1. Okay, thank you one and all.